Good morning, traders. Today is March 3rd, 2013. Very early in the morning. Very sorry I didn't create a video yesterday, but I'm trying to get this video out as fast as possible to you guys today. So, hopefully this video won't be as long. Maybe I'm going to try and cut it down to 15 minutes if at all possible. Everybody knows who's been watching these videos. I rant a lot, so I'll try to keep that down to a minimum. I kind of want to show you the kind of trades that I made this week and how I trade them, how I trade, or how I think I trade safely. But we'll go through that in a moment. First thing I want to talk about is the SPY. But before I get there, thank you very much for hitting that like button, and thank you very much again for watching these videos. And before I ramble on too much, I want to make sure that I squish my videos into 15 minutes. Hopefully I can get as much information in within that 15 minutes as possible. Alright, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. So we're just going to go through this. What I'm going to do is go through it on the 10-minute chart just to let you guys know what I did. In the previous video, I said I actually took a short and then I had a break-even stop, and I actually got stopped out break-even. I applied another short, and then I got stopped out break-even again, and then I applied another short. And so far we'll see what happens, and after I do that, I'll let you know what I see on the daily. Okay, so let's switch to the 10-minute chart real quick. But I think in the previous video, let me just verify here, I had initiated a short, beautiful fall on Monday. I thought that this was going to be the continuation to the downside. To be honest, I didn't think that we would get another pop. I was thinking of a consolidation period before heading lower to this 147.05 and eventually to this 145.07. That was my initial thought when I saw this dump out on Monday. But then Uncle Ben came out and said some things, and then that caused a reversal here, and then we got this nice spike, and then now we have another reversal candle here without volume though, so just keep that in mind. So let me switch to the 10-minute chart real quick. Alright, so this is the starting of this point here is Monday, so let me just zoom in all the way over here. So Monday we came crashing down. We just bled out all the way down. We closed below the 149.51 level. What I was looking for on Tuesday was a close below this 149.51 level to validate this downfall, meaning another close below this level would have validated the move all the way down to 145. It was either that or a consolidation, which is what we got on Tuesday. So I thought this was just going to be a small little pullback in a sense, if you will, before heading down, or kind of just going sideways this way before heading down lower. However, that didn't happen. Again, I have to be honest with you guys, because I'm not a business. This is totally 100% free, this analysis at least. And then anyways, we get a pop all the way up into Tuesday and into Wednesday there. As we come up around this area here, I get stopped out break even. Okay, so I was short, we come up and then I get stopped out break even. Okay, and then I initiated another short around this level here. Okay, no, I'm sorry. After I got stopped out break even, I initiated another short around this area here. This is confusing. Let me maybe the 10-minute chart wasn't as good. Let me switch back to the daily. Okay, this is much better. Okay, I initiated a short, comes down, I'm clearly in the money, very happy, I'm smiling, I'm holding on to my short, and then we pop back up, I get stopped out break even. I initiate another short, we come down again on Thursday, but then it comes up, and then I get stopped out break even again. Okay, and then on Friday I initiate another short, so now I'm still short the market. Now you're probably wondering why, and just what I just talked about, and I know I'm talking fast because I'm trying to fall within the 15 minutes, but how I initiate my shorts and then I stop out break even, I am clearly still, how do I say, once you're in the money, in my opinion, you should never be losing money. So yes, I got stopped out break even, but it's easy to just initiate another short at a cheaper price. So really, it's really better to stop out break even, because as the market pushes higher, if you're short and you get stopped out break even, then you can initiate another short at a cheaper price than what you previously got it for. So if you were to hold on to it thinking that it will eventually fall, then what happens is you have to wait for that time that it popped to cover before you actually start making money, versus you get stopped out break even and then you initiate another short. For example, if over here you get stopped out break even, you initiate another short up here. You know what I mean? Sorry, that didn't make sense. You get stopped out break even here, and then you initiate another short here. You actually entered in at a cheaper rate. You get stopped out break even over here, and then you initiate another short over here, and now your actual price entry is up here versus all the way down here. So if the market actually goes all the way up here, you're gonna have to wait for this area, this amount of price to come down for you to even break even. We all know resistance and support. Whenever you get stopped out break even, that's probably going to be some sort of minor or possibly a major support levels. So you have to keep that in mind, that even if it does come down and you have to wait for it to come down just for you to break even now at your level, because you are losing money, then what would happen is you actually might get a a small bounce before coming back down again, in which case you would have to wait even longer, okay, just to make your money back and possibly some profits. Instead, you stop out break even and you enter in at a cheaper price. Alright, so let's get right to it, to the analysis of what I think is going to happen later. Over here, so like I mentioned before, we had a reversal candle and it was right above the 149.51, which is amazing to me. This level here, it held up pretty well even though we closed below it, but Uncle Ben came out with news and people liked it. It didn't happen on higher volume, so I didn't take a long trade. I didn't take any long trades, okay? And the reason is we have this long down candle here. You notice everything is trading within this candle here. Nothing has closed above or below this candle. This is how I'm going to play this, and it's going to be simple. If I get a close above this candle here, and depending on what the pattern is on the intraday, I'll probably look at the hourly chart or possibly the 10-minute chart, I may initiate another short. It depends. I'm sorry. If we close above this candle here, depending on the pattern on the 10-minute and 1-hour chart, I'm going to stop out of my current short, okay? Now, if the pattern doesn't look good, then I'm going to wait for another day to close above the previous day's close above this candle here. Does that make sense to you guys? And then, in which case, I will stop out because that would have broken it. Now, or broken this pattern, I should say. Now, if I feel a little bit like gambling, I will wait for a close above this candle here. Like in my previous video I stated, a close above this candle here will indicate that we're heading up to probably the 155.44 level up there, okay? So just keep that in mind. Now if we close below this candle here, this red candle, and depending again on the pattern on the 1 hour or the 10-minute chart, will determine if I'm gonna validate that or not. But if we get a close below this candle here, that's going to show a lot of weakness in the markets, and our first stop is going to be the 147.05, and then our second stop will be the 145.07 level, okay? So that's my bear and my bull analysis. It's all dependent on this red candle here. If everything trades within this red candle, it's eventually going to break either higher or lower with a close below or above this candle here. Just also keep this in mind that we had a high here, and now we are struggling as of now to make another high, possibly at the 154.10 level. If it gets to the 154.10 level, I'm still going to have a debate with myself as to if I'm going to actually initiate a short trade after I stop out from here. Because if I stop out from here, any close above this candle here, then it wouldn't make sense for me to initiate another trade at 154.10. Again, it really depends on the pattern, and I will release another video if the pattern does show that a short is in play at the 154.10 level, okay? If you just look at the pattern over here, this 149.51 mathematically calculated level held up 1, 2, 3, 4, 5 days in a row. So this is a consolidation pattern here, okay, before we broke higher. So this is going to have pretty good support when it gets into it. sure enough, it went into it. It closed below, so that's why I thought it broke through, and the markets were showing a lot of weakness. However, this 149.51 level did in fact hold up because of this consolidation period. We got a spike, but what we want to look for is, again, if we close above this level here, another consolidation pattern. 1, 2, 3, 4, 5 days here. This actually 6 days on that one. Is this 147.05. So I would also expect, if we get to the 147.05, a bounce or some sort of small bounce around this level here. Okay. However, ultimately the 145.07 level is the one that I really want, to take a long trade on. Okay, we also have this gap fill over here that I have no mathematical calculation there. However, it is possible that we may actually fill this gap. I know it's a long ways down, but I just want to put the possibilities out there. We also have this 144.30 and 144.07 level over here. Okay, so we're going to have a lot of support areas over there, so taking a trade at the 145.07 level would not be out of the question. Now, the reason why I like the 145.07 level is because we have this pivot point over here. Okay, we have all this consolidation areas over here. We also have a gap window over there. Okay, so we want to keep that in mind, and that's one of the reasons why I like this level, as well as we have these support levels here, so it couldn't fall that much further. It's a $3 difference, even if it did, or even if I was wrong. And then ultimately, if we ever get here, I'll be very, very surprised. I mean, on a short-term basis, at least. Okay, so on the upside, again, the 155.44 is where I would probably initiate another short if we ever get there. All right. I apologize if this video is a bit confusing. It's just too early in the morning for me, and I'm so tired. But I hope you guys are understanding what I'm trying to tell you. If not, please feel free to post questions, and I may respond in a video response. If if it was that far off, then I'll definitely try to make another video for you. Alright, switching to the daily chart of the XIV. This is from Favco. Looks like it has peaked. Please include it. Okay, will do. Let's see. I'm going to save these drawings first. These are some mathematical calculations that I came up with for the XIV. It's created a pattern that I needed to get these calculations. Now, I'm a little bit late to the party on the calculations here. I will admit that this 2107 level would have been a nice short. Let me just get my tool here. It would have been a nice short down to the downside here. However, I will not lie, if you've been watching my videos, these mathematical calculations where you see these beginning points here is actually the day that I actually created the calculation. So if you look here, I actually created it on this day here. So actually not this day, actually today, which is Sunday, but I'll put it on for Friday. If it had hit the 2107, or I actually created a calculation on the 2107 level, it would have been a nice short there, but I was late to the party on that one. Now, a couple of things that you want to keep in mind for this one. Same thing. If you get a close above this guy here, actually this is just one day. If we get 1, 2, 3, so if we get 1, 2, 3 days, so one more day down, and a close below this candle here, then the 1720 level here may get a small bounce, possibly intraday. But what I really like to see is the 1647 level, and the reason is we have a gap fill right here. Okay, we have a mathematical calculation right here. We also have the 200 moving average creeping up, so there is a possibility that we might actually get to the 200 moving average. We also have a 1551 and another number right under this 1551. So if you want to play it safe, and I like to play safe, I would wait for it to get all the way down there. But there's going to be a lot of support around here, so if you want to get in early on the party, 1647 would be a nice spot for me, in my opinion. And that's if it comes down. If it continues higher, say we start getting a bounce on Monday, you want to see if there's going to be a close above this pivot here. Actually, this again would not be a pivot. Let me just take that step back again. Today is a early morning day, but basically the fact is, if we get another day down on Monday, for example, and we hit this double bottom of sorts, and then we start bouncing higher, then we want to wait for a close up here. Okay, but if we start heading up on Monday to the upside, then this no longer is in question anymore. What we have to look for is this 200 moving average or this 2210 level up here that I have here for a possible pullback. But keep in mind that if we start heading higher, I would actually initiate a short if this was something that I would be playing at a double top here. This would be an intraday double top of the high of this candle here. We should get a small pullback here, at least for an intraday, and if not, maybe on a swing day to 23.79. Just keep in mind if any close above here, just like the SPY, will indicate a indication of things to come, which might be a higher spike in the 25 up to the 25.39 level before you possibly get a pullback before going higher. Alright, I'm already into 15 minutes. I'm going to make the dollar real quick. As we all know, the dollar is inverse to the markets, and the dollar is very important to monitor because it's a good indicator of what the markets may or may not do, simply because the markets are inverse to the dollar. Dollar up, markets down, and vice versa. Now, these mathematical calculations, this 81.26 has held up. This $80.61 level has held up. Also, the $78.74 level has held up again. So the calculations have been working pretty well for the dollar, and this is the dollar futures. Just keep in mind again that in order for any significant changes to be made going to be made, we're going to need to first of all, what I wanted to look at last week was this. We need to pass this consolidation area here first, and we've done that, okay, and we've closed above it, which is a good indication. We've got a pullback here intraday simply because we have another consolidation period right in its midst right here, which indicates a pullback, and that's actually what we have now, a pullback off of this consolidation area right here. So there is a potential that the dollar may start pulling back because this has just been a straight shot high. Okay, because the dollar has just been shooting up straight high, we're looking for a pullback in the dollar, and that just means a bounce in the markets. Okay, so just keep that in mind, that the markets could be due for a small bounce higher. I wouldn't say a bounce, but an extended move to the upside if the dollar ever decides to pull back. Now, as we all know, the dollar isn't cent for cent; it is more of a tick for tick kind of thing. Okay, and then ultimately we have a pivot point resistance line up there if we can ever pass this consolidation period here. So basically what I'm trying to say is if the dollar can break through this consolidation period here, then we should see more downside in the markets. If we start pulling back now, then we should see more upside in the market. Okay, so that's it for your analysis for today. The 17 minutes. I'm actually a minute over last week's video, but again, thank you very much for watching these videos. I do appreciate you guys hitting those like buttons, and keep them coming, and keep on trading and keep on making that money. Good luck to you guys next week. God bless to you all, and I'll see you hopefully in the next video.